Hey guys, welcome back. I'm on the road in Philadelphia, just landed earlier today, but I'm excited to bring this video to you because even though Micron traded down today, it didn't finish the way we wanted to, particularly in that last 25, 30 minutes. I leave today with even more excitement and more conviction for this sector than before. Because even though Micron was down by just about 2%, the strange part for today was almost every fundamental data point that we look at, all the signals that came in the market today, they show us that the memory storage outlook or the shortage that we see in this market is even more constrained. The fundamentals look stronger. They don't look weaker as we look ahead, particularly into 2027. So Micron fell by 2% today, but TSMC dropped their July earnings, their July revenue, and a 45% signal was on the board. We saw Micron today in their investor day. They just talked about the significant constraints that they see in 2027 and how their business is thriving right now. And UBS reiterated the buy rating and their price target, and they talked about a massive bullish outlook for Micron from an earnings potential out through 2029 into 2030 overall. So the signals were massive today, and that's what I want to go through in the video together. I want to walk through all of the reports, all of the data that we saw, and what exactly it means not only for Micron, but what it means for the sector overall. Because as I said in the beginning, my conviction today got even stronger. So do me a favor, at the end of this video, you leave me a comment and let me know after this video and you watch it all the way to the end, is your conviction stronger or is it weaker? That's what I want to hear from you guys. But if you haven't done it already, make sure you hit like. Make sure you subscribe to the channel. Let's keep Market Signal growing. Let's get it up over 50,000 subscribers and beyond. Thank you for all your engagement. Thank you for your support. Let's keep this community growing together. All right, let's get started. Let's take a look at the outlook for today, first of all. If you remember what I posted last night, here's the busy events that we have this week. But today I want to focus on two big things. The major event around Micron's Investor Day, and then I want to talk about the economic data that we saw in TSMC's report. I'm not going to go through the Camtek earnings, although they did have very strong signals overall for the memory sector. So jump over there and take a look at those as well on your and just you can see the demand that they're showing for advanced packaging, for HBM inspection, just the strong signals they're showing around the demand for memory moving forward. But I want to focus on these two things I mentioned, Micron and the economic data. So let's start with the economic data because what TSMC dropped was massive for the market. And you can see in the headline here on DigiTimes, TSMC's July revenue had jumped 45% to a record amount of $14.5 billion in July. It's up 6% roughly over June. And you may not think 6% sounds like a lot, but remember, June was the record revenue for this company, and they just put 6% on top, 45% from the prior year, and their forecast now tops 40%. So let's dig into some of the details. You can see, as I mentioned, TSMC, they reported a record monthly revenue of about $14.5 billion for July. It's up almost 6% from June and 45% from a year earlier. It's extending strong growth. It's fueled by the artificial intelligence and the high performance computing demand. So the result, it surpassed the record that they showed in June, and revenue for the first 7 months of this year is up 37% compared to the same time frame last year. It's highlighted sustained demand for TSMC's advanced process technologies as they're entering into the third quarter. So demand couldn't be stronger for TSMC right now. That is a huge signal for the market because we know all of the chips coming out of their fab and coming off their lines need massive amounts of memory. And if you see here, it says the momentum follows a record second quarter and comes during a rapid expansion of leading edge capacity. So TSMC said that demand indications from customers and their customers, particularly the cloud service providers, remain exceptionally strong, with AI-related chip demand expected to remain a major growth engine through 2029 and 2030 overall. Another strong outlook for the memory sector, for the chip sector, for AI build-out overall, when you see TSMC mentioning that their demand is going to stay incredibly or exceptionally strong out through 2030. If we go down and take a look at their outlook for their next quarter, for the third quarter, their outlook, they expect their revenue to exceed $45.8 billion, representing a sequential growth of roughly 11 to 14%. And they do feel like here's a little bit of they're diluting their second half margins, but it's based on their ramp up of their 2 nanometer node. So they go on in this paragraph highlighted here. They're saying they're estimating that the accelerated ramp up of their 2 nanometer node will dilute the second half gross margins by about 3 or 4%. But the company expects strong advanced node demand, continued cost improvements, higher manufacturing efficiency, and capacity optimization to offset the part of that impact. But overall, the big piece you can take away here is right in that paragraph below that they remain more bullish on 2026. So when TSMC comes out and said they are bullish on the rest of 2026, that is a strong sign for the market. TSMC raised its forecast for the full year in US dollars. They raised it by more than 40%, sharply above previous expectation of more than 30%. And they also raised their CapEx, as you can see. They went from a range of 52 billion to 56 to 60 to 64 billion. This CapEx investment right here is a great sign for memory because TSMC's massive foundry, it directly confirms, or their CapEx investment, it directly confirms that the bottleneck in global AI infrastructure isn't just compute capacity. It is memory bandwidth as well. And we also know, as I mentioned earlier, that they're expanding. When they aggressively ramp up their 2 nanometer node, and they scale up their CoWoS advanced packaging capacity from 72,000 monthly wafers in 2025 to over 113,000 monthly wafers this year. Remember, every single one of those AI processors that come off of TSMC's lines, they require dense, high bandwidth memory stacks to function. So that is a great sign for Micron overall. So let's jump over to the piece around, well, first let's take a look at Micron. We saw it was down today by about $16, a little under 2%. We see in the after hours, it's kind of huddling about $2 more, about 0.25% higher. And if you take a look at the outlook for the day, it actually gapped down like we expected. We talked about it yesterday. We thought that Apple news around CXMT would cause a little bit of a gap down, but it immediately was bought back up and it rose to a high here of 894 of the day. Fought back down again, and then essentially did what it's been doing the last few days. Just got into a sideways digestion, just really tight candles. But it was, if you take a look at a trend line, it was accelerating upwards until the end here, where it just flushed out. But the volume was really low today, guys. So this last piece of flush out doesn't worry me. I don't think it's a loss in confidence in the stock. It's certainly not any indication of fundamentals for the company or the demand in the marketplace. So we just had really low volume. If you take a look on the screen here, the volume today was just under 28 million shares, which is significantly below the average overall. You see right here, the average is about 45 million shares for Micron. So down significantly, but there was another signal I want to call. I pull up the put call ratio here, another signal for the day. If I just scroll down, just take a look at the difference between put volume today and call volume today. So we are significantly more calls at a 0.78. And you can clearly see in the line above that a put call ratio below 0.7 is generally considered bullish, and a point call ratio above 1.0 is generally considered bearish. It was actually lower earlier. It was a 0.66. So we're hovering in kind of a bullish territory for the stock. I think this is a good signal for us overall. Even though we had a little bit of dip today, I do think institutional investors are setting up based on what we saw today from TSMC and what I'm going to get here into a moment around Micron's Investor Day. We're setting up for a nice growth tomorrow with Micron. That's my outlook for overall as well. I want to see if we can test that 875, that 870, 875 level as well. Because where did we finish? We finished at 861. So that's what I'm looking for tomorrow with Micron. Can we test 870, 875 again and move past that in tomorrow's trading action? But let's talk about what we saw in the Investor Day for Micron, because there were so many great signals that their executive vice president and their chief business officer laid out in this presentation. So let's walk through some of them. And you can see here, Micron, they use this KeyBanc Capital Markets Leadership Forum to argue that AI is reshaping memory demand faster than the industry can supply, or faster than the industry can add supply. And here are some of the key takeaways. Number one, 2027 is expected to be tighter than 26. Memory has become a strategic asset for customers, not just a commodity input, especially in the data center AI systems. They highlighted their strong performance that the company is driving. They talked about expanding manufacturing and supply chain investments, particularly here in the US, and their commitment to the US market. And they also talked about covering half of their revenue through the long-term contracts. And those contracts are extending out to 2030 overall. So half of their volume now is going to be covered in those contracts. But let's go through some of the details, because their chief business officer, he laid it out perfectly here when he said the current cycle is being driven by a broad AI build out that is still early in its life. And he said that the company is seeing stronger demand signals since its last earning report, and now expects calendar 27 year to be tighter than 26. So there's so many signals that just confirm that over and over and over again. So again, I go back, I'm still shocked that the Citi analyst says that 2026, the second quarter of 27 is going to be softening. I don't see any evidence that, as I mentioned a few days ago, I continue to look, I just don't see anything. If we go through a few of the areas of the commentary, financial results is the first one. So they mentioned that gross margins are at extraordinary robust levels, that management says the business is on a terrific trajectory. Price increases, they have moderated from peak levels, but Micron says this reflects strategy, not a sign of cycle weakness. They're moderating because of the contracts they're signing and the ceilings and the floors in those contracts. From a capital spending and manufacturing perspective, Micron is the only company investing in front-end memory fab here in the U.S. So they did talk about Samsung and SK Hynix investments here in the U.S., but it's not related to DRAM. Only Micron is building DRAM here in the U.S. and investing in DRAM in the U.S. Another great sign, kind of just a sovereign piece, a national kind of a strength for Micron overall. The demand environment and customer behavior. So demand is strong across the data centers, consumer and industrial markets, but the pressure is most acute in data center AI. In his words, I love this statement for him. He said, in his words, the number one constraint for many customers is not power, it's not real estate, it's not data center space or logic wafers, it is DRAM. The bullish sentiment extends to Wall Street as well, and it talks about how the Investing Pro data shows that 27 analysts have revised their earning estimates upward for the upcoming period. So DRAM is rising across, or demand, is rising across multiple customer segments. Data center customers are facing the sharpest shortages, and customers are locking in power, real estate, and data center capacity for future AI deployments. Micron said demand signals have increased since their last earning call. Micron has visibility into customer roadmaps beyond 2030 through engineering partnerships that go well beyond the normal supplier relationship. So this is a great piece too, where they are becoming an entrenched partner with these customers, more so than we have ever seen in other cycles in the past. Strategic relationships is covering 50% of their revenue. And here's the best part. It says it is running through calendar year 2030 on 5-year terms. Smaller customers, though, like automotive clients, have 3-year terms, but the big hyperscalers are signing 5-year terms. We're getting revenue visibility out through 2030. From a future outlook perspective, again, the first bullet point, calendar year 2027 is expected to be tighter than 26. Demand is expected to keep rising as more users and companies adopt AI. Generative AI is early, with billions of users not even using AI tools yet. Enterprise AI adoption is still in early stages across large companies. Agentic AI may require 5 to 30 times more tokens than chat-based interfaces. And then, like we talked about yesterday, physical AI and robotics could become a major new source of memory demand later this decade and into the next decade. So customers are increasingly treating memory as a strategic asset. That is the key takeaway from the session today. And if you look at some of the highlights overall, this is the piece I mentioned where Samsung's Texas project is focused on logic foundry, not memory. SK Hynix Indiana investment is focused on back-end assembly and packaging. So Micron remains the only company investing in front-end memory fabrication or manufacturing here in the US. Finally, the last couple things, he said Micron is a very different company now with a much stronger business model than we've seen in past cycles. And he described AI as a total game changer for memory and said the next 5 to 10 years should bring strong tailwinds overall. So guys, this is a massively bullish investor call today for Micron. I think it was exactly what the company needed. It helped kind of balance some of that CXMT headlines that hit the stock early. And we saw that little bit of trend before this kind of flush at the end of the day. But if you take a look at this investor day and all the comments, it lines up directly with what we're seeing from UBS. They reiterated the buy rating on Micron and today. So let's go through that. This is from Tim Acuria, UBS's analyst. He's reiterating the buy rating for the stock with a price target of $16.25. And it's all based on the robust kind of outlook, earnings outlook for Micron. They're adjusting their EPS. Look at these adjustments. So EPS this year of $74, $185 roughly next year, and $267 in 2028. All still well above consensus, with the bigger point being here that we estimate that Micron's earnings per share will remain greater than $160 all the way out to 2029. And the company is generating $450 billion cumulative in free cash flow through 2028. To us, UBS, he says, this increasingly looks like a structural reset in earnings power, where this kind of durability and visibility should command a shift towards a broader semi multiple. So they maintain their $16.25 price target for Micron based on that bullish kind of outlook and earnings potential for the company. And then the last piece, guys, I want to jump and talk about is just an article I dropped in MarketWatch today. It was what we talked about a couple of days ago, how NVIDIA is kind of thinking about shifting their entire architecture based on the shortages and the constraints that we see in the marketplace right now, and how they may ramp down the number of kind of the HBM needed within the Vera Rubin platform. But what they essentially say is that if they do that, that will be a bullish outlook for the memory provider. So Timothy Acuria, again, he believes that if NVIDIA has to move to despec its upcoming its Rubin Ultra offering, referring to the practice of downgrading certain capabilities of its chips, it could result in less HBM per chip, but more chips in the supply chain, which could lead to an overall higher consumption of HBM in 2027 than what was previously forecasted. If that's true, that'll drive a higher valuation for Micron, for SK Hynix, and Samsung as well. And he goes on to say that the supply of HBM is getting tighter, and pricing for HBM4 and HBM4E is even stronger than prior expectations. So Curia said that memory suppliers are re-widening the price premium for HBM, which could send average selling prices up by 79% from the prior year compared to the previous estimate, which was 67% increase. So that is a significant jump, a 12% jump over the prior year. But these guys are strong signals for me across the board when I take a look at the memory sector, when I take a look at Micron. And I don't know if you feel the same way. Drop your comment below, but do your conviction, does it feel stronger to you after you go through all of that fundamental data? Because bottom line for me, fundamentally, the setup for the memory sector could not be stronger. When you see TSMC in their record-breaking July revenue, it's up 45%. And Micron, with their explicit guidance that 2027 will be even tighter than 26. And then you see UBS drop that bullish outlook on the structural cash flow projections for Micron. It just provides, or it just shows us a concrete foundation for this stock and should be a bullish conviction for long-term investors. So guys, that's all I have for today, coming to you from the road, on the road here in Philly. But let me know your thoughts and what you took away from today. Thanks for tuning in to Market Signal. Make sure you hit like, make sure you subscribe to the channel. And guys, I'll see you on the next one.